Correct. So our next presentation is with Hank Korth. Dr. Hank Korth is a professor at Lehigh University. We have done quite a bit of projects through him, through his connections, mainly blockchain. Lots to say about Hank, and I just don't have the time for it, but he's a very good friend of the program, and he's actually wearing our cap.
I'm so sorry. I hope I'm audible.
Oh, you're back? Okay.
Yes, I came back. Can you give me access?
Okay, thank you,
Go ahead.
Patrick. I'll go get the recording back on. Wonderful.
Yeah.
For the recording, I will reintroduce myself on the next slide. But
Please.
let me just start off with a couple words about the topic, zero knowledge. And you wonder, what does this have to do with anything? And I hope to explain that. The basic idea of zero knowledge is simply that we prove that we know something without actually telling you the thing that we know. And so in this talk, if I manage to prove to you that I know something about zero knowledge, but you get nothing out of my presentation whatsoever, my talk is a perfect example of the topic. Hopefully, there will be something there. So let me go ahead now and share my screen so that we can proceed. So just a quick thing about who I am. I'm on the faculty here at Lehigh University. Been here for a while, as you can see. I've been a department chair. I co-directed computer science and business for 8 years, and that is a wonderful Lehigh unique program that is both an accredited computer science degree and an accredited business degree, all rolled into 4 years. Really cool thing. My research focus over my career has been in databases, but most recently a strong focus in blockchain. So let me move on to the actual topic here. And what is zero knowledge? Well, it's very much used in blockchain. It is an old idea that goes back to the 1980s and comes from the domain of cryptography. And as it's defined, proofs that convey no additional knowledge other than the correctness of the specific thing that we're trying to prove. So it's the idea of doing a minimal transfer of information to serve a very specific purpose. This is used in blockchain in a number of ways, and I'll talk about some ways that it's very applicable in the financial world. So to give you an idea, just intuitively, first of all, on how this can work. Imagine I've got a picture, a whole bunch of penguins, all right up next to each other, head to head. One of them's a puffin. I know where the puffin is, but you don't. Now, how could I prove to you I know where the puffin is without actually taking the picture and pointing, look, here it is? What I'll do is get a large board with a little head-size hole, stand behind it, slide the picture around, and oh, there's the puffin. So, yep, you know, I know where the puffin is, but you've got no information on where in the picture it might have been because I was just sliding it behind an opaque panel. Now, that's an interactive zero knowledge proof. We've interacted with each other. I've achieved this idea of proving something without telling you anything more than that. What we want for our purposes here is a non-interactive proof. And this is a case where we then wind up publishing all the needed information so that anyone can verify the proof. There's a lot of crypto math involved. My focus here today is on the application. And so the thing that we're using is called a succinct, non-interactive argument of knowledge. That phraseology architected to be the acronym SNARK. And for the zero knowledge case, it is a ZK SNARK. And what's done here then is that you compute a proof that publishes the prover's secret and the verifier's secret in an encrypted form that allows verification without actually revealing those secrets either. This has been used in blockchain. Historically, Zcash and Monero were very much involved there. Tornado Cash is a recent thing. It's been very much in the news because it's been used for anonymous transactions that the US government didn't really like. But zero knowledge is not just for hiding things. It's not just for money laundering. There are a whole bunch of really important purposes to have zero knowledge. I mean, a very simple kind of, day-to-day example. Suppose that Lehigh were to pay me, not by putting dollars in my bank account, but they paid me in crypto. Well, if I get paid, let's say in Bitcoin, then on the Bitcoin blockchain, there's a transaction that paid my take-home pay to my address. Now I go to a store and buy something. I again use that Bitcoin address. Well, now looking on the blockchain, that store who knows who I am, because they have like my frequent buyer identification, now knows my take-home pay. So my whole financial history becomes public. Clearly, there is a legitimate need for personal privacy. Another role for this is in an accounting situation where I might want to prove that the reports I generate for the government, regulatory, tax, whatever, all come from proper sources, that I can prove good behavior without having to reveal every last detail of that behavior. Now, there's another whole realm of applications that I won't focus on here, and that's the idea of a zero knowledge rollup, where I'm very sorry for the background. I'm next to a large classroom here, and I think class just let out, and there's not a whole lot I can do about that.
That's okay.
But that's how how things go every now and again. While I let them walk away, I'm just going to grab a window I'd like to have here in front of me.
So Hank, while we have this little law, just to make sure, because this is actually interesting. So basically zero knowledge is, and I could see now that you're talking about the financial information, you're basically saying, not trust me, but this is real. It's true, or it's real, but I don't have to prove it to you.
Well, what I prove is that it is true and real, but I don't reveal the supporting details. Take the penguin example. I prove to you that I know where the puffin is, but I still haven't told you where it is.
Interesting. Well, this is all about trust and okay. Got you. Trust and verify. Yeah.
Right.
That's interesting.
Yeah, and while we're on a break, you can see I'm kind of, rocking the brand here with zero knowledge proof shirt. But anyhow, to move ahead, there's also uses for this within the blockchain space for performance reasons, and that won't be a focus today. And I see there's a question about using this in the password space. And again, there too, that if I had, let's say, a biometric, I could prove that I have the correct finger that I'm using, but not actually have to reveal that. And so there are lots of good applications that are slightly off the topic of finance, but I want to delve into the finance ones here because obviously that's the focus of this conference. So let me talk an accounting example. Okay, so a business, of course, keeps a ledger of everything that happens and then has to do reports to the SEC, to the IRS, to the financial press, whoever else. And so we can imagine a concept here where I take the base accounting records and make a public cryptographic proof to them. Now, while I'm omitting the details here, the idea is that I basically put a hash on a public blockchain, and by doing it with the structure called a Merkle tree, I have the possibility of proving that certain things are in that commitment without revealing all of them. And so if an auditor comes in and says, I want to know about this, 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 and that, well, I say, here they are. And I'll prove to you that they are actually in the same accounting records I used for my SEC filing, the RS, et cetera, but I don't have to open up my entire set of books. When it comes to generating a report, something that would be done with code, I can say, here is a proof that this report was generated with this code from the accounting records to which I made the public commitment. So basically what I can do here is still be a cheat, but I'm proving that I'm a consistent cheater. Now, that doesn't solve the whole problem. We obviously still need to audit the base accounting records, but I don't have to audit the aggregations, allocations, et cetera, in every report. So I don't know what the fraction is, but half, 2/3 of the accounting work goes away. This does depend on a standardized format. That's a very key point here, and probably a big barrier between this and reality. But I envision that at some point there'll be such a strong incentive to do this that this will begin to take off. And so the result of this then is that we would have an automated, regulatable, verifiable accounting system, but one that is more private, since less has to be disclosed, just the minimum needed, and lower cost. Another wonderful application domain is the whole thing of central bank digital currencies. And that's something very much in the news. The concept is that we take a fiat currency, let's say the US dollar, but it could be the euro, anything else, and make it digital native. Now, what do I mean by making it digital native? I don't mean, oh, we have credit cards, we have electronic funds transfer. What I mean is that we get rid of the paper currency and everybody takes their smartphone or even a relatively lame phone, something on the internet, and that's their means of doing transfers. The possibility. Okay, good. We have the recording back. Sorry for that glitch there. Okay. For those in watching this later. You have, I guess, zero knowledge of what I said during the non-recording time. Sorry. I couldn't resist that. And so what we can do with zero knowledge is simulate the thing that I can do with cash, of having a transaction that's not visible to government. And I will be actually addressing that wonderful question in just a second here. Now, I would contend that if I can't go to the street corner and do a drug deal in digital currency, cash won't go away. There are certain markets that are there. You may like them, you may not like them, but that's reality. And so for digital currency truly to supplant cash, there has to be a secure way of doing private transactions that are provably limited. And so what does that mean? That means I need to be able to prove that whatever private things I did, possibly offline from the central government, I didn't transact with the list of prohibited entities, or maybe conversely that I transacted only with whitelisted entities. I may also need to prove that the total amount of funds I accumulate in this process are within some bound. I mean, we have current laws in the US with the $10,000 limit. What that limit should be is a separate question. The point here is that whatever it is, I can prove with zero knowledge that my offline private transactions follow the rules, but without revealing the exact transactions. And so to the question, zero knowledge technology provides a way of providing a strong guarantee in terms of whatever the central bank's policies may be in terms of prohibited entities. Now, whether that's ethical or not is an orthogonal question. I mean, is it a good thing that the US government can kind of, rule the world with the stick of the dollar? If you don't do what the US likes, we hit you with sanctions. For some things, that's a good thing, but there are many folks that object. So the ethical issue is another one, maybe more for a political or social policy discussion. But the technical point here is that we have the capability with ZK technology to implement the kinds of restrictions that we may want to have, and do it in a way that very nicely blends privacy, transparency, and regulatability. And those things come up in so many realms, not just a matter of prohibited entities, but you think about the whole idea of regulatory reporting in terms of companies and banks and so forth. They have to ensure that nothing bad happened and prove that to the government. On the other hand, companies have legitimate secrecy of how much they pay their suppliers, how much they pay their employees, etc. And doing this in a totally digital realm runs the risk of disclosure without a technology along these lines. And so my broad point here then is that zero knowledge will enable a whole lot of tools to make blockchain technology and digital currency truly usable in the financial world. And looking ahead, I expect to see a lot happening in this space, huge demand, and it won't be for funding terrorists. It will be just the opposite. It will be preventing the funding of terrorists. Now, to get from here to there, there's still a lot of research to do. The cryptography is there, but it needs to scale. Among the problems with scaling here is just the sheer volume of this. Think about a digital currency, and you recognize that in that situation, you've got so many of these transactions, so much to prove. So there's a volume issue. There's also a size issue. When you look at my accounting example, as an instance, the code that actually goes about the business of producing a report for the IRS or the SEC will be a huge amount of code. And that means that generating a proof about that big operation becomes a huge proof to generate that will require a huge number of constraints and very consumptive processing. But the consumptive processing is just to generate the proof. Verification is fast. And so we're doing research here at Lehigh to look at using modern parallel architectures to accelerate the generation of zero-knowledge proofs that are very big, and also to parallelize high volumes of zero-knowledge proofs. For more details on that and to links to our partners, I'll point you to the bottom of my slide. You see the website, blockchain.cse.lehigh.edu. Lots of cool stuff there, including a whole bunch of stuff with the Masters in Financial Engineering and Patrick Soro. So I'll give him a shout out there. Also want to do, in conclusion here, a very quick note on what we're doing besides research at Lehigh. We have a whole bunch of courses on the computer science side, hardcore courses in cryptography and coding of contracts and consensus, grad and undergrad. But then maybe more of interest to this audience, we have an undergraduate course that focuses on all of these application spaces, not just zero knowledge, but the many other domains in which blockchain technology applies. Yeah. And then at the grad level, we have a blockchain course in the Masters for Financial Engineering. I'll flag the cap. And with that, happy to take any questions you might have. And I've left a few minutes for that. And of course, I did start a bit late. So I think maybe we can take 5-6 minutes
sure.
to questions or comments.
I think you had a question from Olu, who is a student in my program. Do you see the questions?
Yeah, I worked that into the flow of the talk. I think I said enough, but Olu, if you want to do a follow-up, go right ahead. I'll be watching the questions for things that might come in.
Yeah. Let's see if we could, hold on, I'm having some Q&A here.
And if not, I'll invite others to pop a comment in. I'm looking both at the chat and the Q&A if something shows up.
Oh, here we go.
Okay, good. So
It was addressed, great.
yeah.
Okay.
So Patrick, do you have any questions?
Well,
Or did you gain
yeah.
zero knowledge from
No,
this?
no. Well, no. This is interesting. No, what I wanted to ask you is, there's lots of, let's expand a little bit because I mean, you are highly, we should tell everyone a little bit like the program is as well. And that's how we're connecting is that, I mean, yeah, you're teaching and you're university, but you have a huge amount of connection in the real world. I mean, we could show you on LinkedIn going to all these places with all these executive from the blockchain world, right? So, I mean, there was news recently about a failed a failed acquisition, and we've seen the price of the Bitcoins dropping, and they let go a few of the people in that field. What is your view as to what's going on here? Is it should we be concerned? Is it the government trying to take over the field, or they are fighting with each other? What's really going on, at least from your point of view, in the blockchain world?
Okay, I mean, there's always been volatility. I mean, FTX is the thing right now. It was UST a while back. Go back several years, there was the Mt. Gox fiasco. There are two dimensions of this. The first one is that what I was talking about here, and that what we generally are talking about within the financial engineering space, is an underlying technology that enables us in the financial industry to do things we couldn't do before, and to do things that we could do before much faster. They don't have to be unregulated. Yeah, many things are now, but they don't have to be. And we can build these systems in a way that combines this efficiency with regulatability, transparency, and privacy. Now, the other part of this is, if you look at where the failures are, there's something very remarkable about where things go wrong. So FTX was a centralized operation. They had associated with it the Alameda fund, and that was sort of cross-mingled with FTX. So what was going on here was centralized financial manipulation that failed. Go back to UST, that was an algorithmic stablecoin. So that means that they had code to try to keep UST pegged to the dollar. That algorithm works very, very well unless it goes way off the peg, and then it will actually destabilize. Combining that with the very centralized control of Quant, that caused that to spiral. And so if you go on to other things, Celsius, Voyager, et cetera, they're all centralized. You look at the decentralized things. The blockchains ran fine. The Uniswap decentralized exchange cruised on unaffected. And so the operation of the decentralized world is much, much more robust than these centralized things. And now I see a question here, aside central banks for ZK, what other financial institutions are actively involved? There is research in this space going on in many of the big investment banking firms, also going on in a number of startups that are going to be in the business of providing this digital currency infrastructure, not only to central banks, but to commercial banks that may play in this space. So very active role there. And then separate from the financial world, because ZK technology applies to acceleration of processing of blockchain transactions, there's a huge investment within the blockchain world itself. I mean, my zero knowledge shirt here actually comes courtesy of Mina, which has some very nice technology for making blockchains accessible to light clients like phones through recursive zero-knowledge proofs. So big industry there, huge VC circle surrounding this with lots of money they're looking to invest. I'll take other questions unless we need to move on, Patrick.
Hold on, while we, let me see, James, are you ready? Only until I.
Yeah, I'm ready whenever.
Oh, okay,
you are.
okay. Maybe you could answer quickly those two questions, Hank?
Okay, so I see there's two more down
Yes,
here.
yeah,
Sorry,
yes.
I hadn't scrolled down yet. And will FTX survive? I mean, in some ways, your guess is as good as mine. You know, it's like you're a computer scientist predicting in finance, but you know what? I'll do that anyway. And this very much looks like a death spiral because of all the intertwined financial relationships. Contrast this with Coinbase, another exchange you no doubt have heard of, and they are very much trumpeting the fact that they do not rehypothecate client assets. So everything's there if somebody wanted to withdraw, but they are likely to be in some trouble there. And then Pratik's question about the advertising revenue for Facebook and Twitter and where that was parked. And yeah, I mean, somebody who happened to invest in FTX, they're going to lose a ton. And I don't know exactly, who was investing. I mean, we can see what's happening to FTX, but the customers, that's just an unknown. I've read that Sam Bankman-Fried, who's the architect of this whole mess, is trying to favor customers over investors, but not clear how much control he's going to have over where that goes. And so, yes, there could be some, spin-off effect on investors, and that one's a harder one to predict at this point.
Hank, thank you very much. As
You're
you can
welcome.
see,
Been fun
once-
talking to all of you.
It was fun
and,
to, yes.
to those listening, feel free to follow up with me. My website's there, and I'll stop my screen share.
Okay, great.
Bye.